Welcome to SS2 Commerce. Today we explore commodity exchanges and produce markets, two vital institutions that connect farmers, traders, and buyers across Nigeria and the world. A commodity is a raw material or primary agricultural product that can be bought and sold. Examples include cocoa, groundnuts, palm oil, cotton, rubber, and minerals like crude oil. Nigeria is one of West Africa's largest commodity producers, and understanding how these goods are traded gives us insight into the engine of our national economy. Before modern exchanges existed, buyers and sellers had to meet physically in open-air markets to negotiate. Today, commodity exchanges allow standardized contracts to be traded electronically or on a trading floor, making commerce more efficient and transparent. The Nigerian Commodity Exchange (NCX) and the Lagos Commodity Exchange (LC) are examples of former commodity trading platforms in Nigeria. These exchanges set standards for grade, quantity, and delivery dates, so a trader in Kano can buy a contract for cocoa beans from Cross River without ever seeing them. This reduces transaction costs and opens markets to more participants. A commodity exchange is an organized market where standardized contracts for commodities are bought and sold. There are two main types of commodity contracts: spot contracts and futures contracts. In a spot contract, the commodity is bought and sold for immediate delivery. The buyer pays, the seller delivers, and the transaction is complete. In a futures contract, the buyer and seller agree today on a price for a commodity to be delivered at a future date. This is extremely useful for both farmers and buyers. A cocoa farmer can sell a futures contract in January, locking in a price for October delivery. Even if cocoa prices fall by October, the farmer still receives the agreed price. Similarly, a chocolate manufacturer can lock in the cost of raw materials months in advance, making budgeting easier. Commodity exchanges also perform a price discovery function. The prices set on exchanges reflect global supply and demand and serve as reference prices for traders everywhere. Key commodity exchanges globally include the Chicago Mercantile Exchange (CME), the London Metal Exchange (LME), and the Intercontinental Exchange (ICE). Produce markets in Nigeria operate at both informal and formal levels. Informal produce markets include local open markets such as Mile 12 in Lagos, Dono Grain Market in Kano, one of the largest in West Africa, and Onitsha Main Market. These markets handle enormous volumes of agricultural produce daily. Yams, tomatoes, rice, beans, and plantain all pass through these hubs. Formal produce marketing in Nigeria historically involved the produce marketing boards, established during the colonial era and continued after independence. These boards, such as the Cocoa Marketing Board, Groundnut Marketing Board, and Cotton Marketing Board, had monopoly control over export crops. Farmers sold to the board at fixed prices, and the board exported the crops. The boards were abolished in 1986 as part of the Structural Adjustment Program (SAP), and since then commodity marketing has been liberalized. Today, the Nigerian Incentive-Based Risk-Sharing System for Agricultural Lending (NECO) and the Central Bank of Nigeria support agricultural commodity value chains. For WAEC purposes, remember the distinction between produce markets and commodity exchanges. Produce markets deal in physical goods at current prices, while commodity exchanges deal in standardized contracts, often for future delivery. Let us summarize what we have covered today. A commodity exchange is an organized platform for buying and selling standardized commodity contracts. Types of contracts include spot contracts for immediate delivery and futures contracts for delivery at a later date. Produce markets handle physical agricultural goods and operate at both informal local levels and formal national levels. Nigeria has rich commodity produce including cocoa, groundnuts, palm oil, and crude oil. Key advantages of commodity exchanges include price discovery, risk management through futures, reduced transaction costs, and market transparency. For your WAEC examination, be ready to define commodity exchange, distinguish between spot and futures contracts, name Nigerian and international commodity exchanges, and discuss the role of produce marketing boards in Nigeria. In your next lesson, we shall examine innovations in the chain of distribution.